Hello, this is Leroy Meadows, and welcome to this session where this is session 3 of process costing. So we're picking up where we left off. Previously, we had talked about dealing with process costing and the difference between that and job costing. We also talked about the case where we complete everything that we make. There is no beginning or ending work in process inventory. In that case, we just take our total costs, divide that by our total units of output, and we get an average cost per unit. If there are situations where we have either beginning inventory or we have beginning work in process inventory and ending work in process inventory, then we have to take the 5 steps. And the 5 steps to compute the cost allocation process is summarize the flow of physical units, compute output in terms of equivalent units, and then we're going to summarize the total cost to account for, compute the cost per equivalent unit by divide step 3 here into step 2, and then finally assign total cost to units completed and to the units in ending work in process. So let's go ahead and go back here, and let's go now and pick up where we left off. And we did before also the weighted average method and the first in, first out method. So we're going to move through this a little faster now. However, if you're not familiar or as familiar with weighted average method, first in, first out method, I encourage you to go back to the last session, session 2, and review that. And before we pick up here and deal with transferred in costs, because we're not going to spend quite as much time here on the actual computations for first in, first out and weighted average here. Now, I do want to point out that we did talk about the weighted average or the journal entries themselves, and this was from the weighted average method. When and your book is taking the position here that the materials that the company has ordered is going straight to the work in process department and the assembly department. So it's bypassing where we would store inventory normally because it's all going to the assembly department. So this is the case where we have work in process inventory for the assembly department debited, and we credit accounts payable control. If we did have this going into a materials control or in raw materials, we would debit that account, credit accounts payable, and then transfer that to work in process. That is certainly an appropriate method to do. However, the accounting department, the management decided that it would be easier just to transfer it right straight to the assembly department because they're the ones that are going to need those direct materials. Then we're going to debit work in process for the other stuff other than direct materials, such as direct labor, let's see, accumulated depreciation, the allocation of overhead, rather. So, and then finally, the transfer of products from the assembly department, which we're going to credit, to the testing department, which we're going to debit. So your work in process is simply going to be the conversion costs associated with converting the materials into finished units of output. And if we're in first in, first out, we know that there's a different dollar amount that's used for transferring inventory out. Let me see, do we have, well, let's go here. But the difference is a little bit smaller in this case. Again, what's the differences between weighted average and first in, first out? We talked about that. And just refresh your memory, financial accounting. When we dealt with merchandise inventory, what do? We had specific identification, but we had first in, first out, weighted average, and then last in, first out, or LIFO. Each one of these three yielded a different amount of cost of goods sold, and by default, they computed a different amount of gross margin and operating income, as well as the value of ending inventory. So the method that we choose must be chosen carefully, because once we choose it, it's ours to own. We can't just go back and change it just because we don't like the results after a few months or something like that. So once we choose that inventory valuation method, we're going to have to stick with it. So now let's talk about transferred in costs. These are costs that incurred in a previous department, or departments, plural, that are carried forward as a product's costs when it moves to subsequent processes in the production cycle. So let's take a look at this. Let's say we have 3 departments: Department A, Department B, and Department C. In Department A, that's the first department. That's where things get started. And then our widgets or our units of output are transferred from A to Department B. And then once Department B is done with them, they're transferred to Department C. Would we expect to see transferred in costs in the first department, Department A? Well, of course we wouldn't, because that's where we're starting from. That's our starting point. There's nothing to transfer in. However, we would expect to see transferred in costs from Department B and in Department C. What are transferred in costs represented in Department B? Well, those are costs transferred in from Department A and carried over to Department B. In Department C, what are transferred in costs representing? They're representing costs that are transferred over from Department A and Department B over to Department C. So it's a sum of all costs incurred in previous departments that are carried forward. So as it goes through more departments, the bigger that dollar amount of transferred in costs represent. And then also it represents multiple departments. It represents every department or every process before ours. Now, journal entries are made to mirror the process in the production from department to department. They are treated on our production report. We're just simply going to treat them as a separate type of direct material added at the beginning of the process. And that's just so we can keep track of them separately, but yet add those on to our current department costs. So let's take a look at transferred in costs using the weighted average method. We are going to have our weighted average method from the testing department from March 17th. So this is a continuation of the example in the book from the illustration used in work in process, or used in weighted average and first in, first out. And that was in the assembly department. Now we have the testing department, the second department. The first department was where everything began, so we don't expect to see transferred in costs. However, in the second department, we expect to see transferred in costs because we're carrying those costs from that department over to this department, and then that way we can compute our total costs of inventory and cost of goods transferred out to the next department up to date. So we get a total here. So step 1, we're still going to account for all the physical units. We're going to figure out how much to account for, and then we're going to actually account for all of them. It's going to be a little bit different here. We're going to start with our beginning work in process inventory. Then to that, we're going to add not units started and completed, but we're going to add in to the beginning inventory transferred in during the current period, which was 400 for the testing department. So we had already 240 units in process. At the beginning, they were started but not yet completed. We transferred in 400 units this month from the assembly department. So altogether, we had 640 units to account for. Now, under the weighted average method, remember, we just figure out how many total units that we complete and transfer out during the current period. We didn't separate it between those from work in process beginning and then those that were transferred in during the period. So we're just getting a total completed and transferred out, 440. So if we have to account for 640 units, 440 were transferred out to finished goods. That means we have 200 units in ending inventory. And so now we not only determined how many units we had to account for, 640, we also accounted for them. Step 2, exactly the same. The only difference here is in step 2, you're going to have an extra column here for transferred in costs. And with transferred in costs, we're going to assume that they are complete at both. They are fully 100% complete for the units transferred out for equivalent units, and then for work in process ending inventory, we're going to assume that they are complete there as well. So that's always going to be 100% when we're calculating equivalent units for transferred in costs. And then we'll go back with our direct materials and our conversion costs, and we'll actually calculate the ending work in process inventory for equivalent units there. And so step 2, with the minor exception of a new column, transferred in costs, those costs carried in from another department, and those units being fully complete for both those units completed and transferred out and work in process ending inventory. But really the two main differences here. Other than that, everything's the same. Now, let's go to step 3. Step 3 is the same under the weighted average method. We're taking our work in process beginning costs, adding to that costs added during the current period. That would be the dollar amount of the inventory that was transferred in to get total cost to account for. Then we take, in step 4, take that total cost to account for and divide it by the equivalent units of work done to date. And we calculated that in step 2 to get our cost per equivalent unit of work done to date. Then we're going to take that cost per equivalent unit of work done to date and assign that to our completed and transferred out units, and then also assign that cost to work in process, valuing for transferred in costs each equivalent unit times 133.75. And then again, we'll do the same thing with direct materials and conversion costs that we did before. Same thing we did before. We really just in steps 3 through 5 have just another column with which to do this. So now let's take a look under the first in, first out. Under first in, first out, we're going to account for the units, and then we're going to calculate the number of units to account for, and then we're going to account for those. Remember, under first in, first out, we have 640 units. Now we have to pay attention to how many units did we transfer in during the current period. Okay, we transferred in 400. So we had 640 units. So how many units do we have in ending inventory? Well, we had 200, which means then that how many units did we transfer out? Well, we transferred out 440. The calculation of units that we transfer out is going to be the same under both. I mean, there's no difference. The only difference is under weighted average, we're just going to have one line item completed and transferred out during the current period. Under first in, first out, we're going to separate that. We're going to assume that the beginning inventory was transferred out first. Since it was first in, it's going to be the first one out the door. And then we're going to calculate the units started and completed. Also remember that from beginning work in process, we're calculating the equivalent units of work done in this period. So in this situation here, all the direct materials were there involved in the work in process at the beginning of the period. So did I have to do any more work? No, I did not. What about, and that was for transferred in costs. Excuse me. What about direct materials? Well, direct materials was what? They had no materials added the last period, so I had to add all the materials this period to the beginning work in process. So they had no materials before, so now I had to add them all in this period. So that's why I'm accounting for the beginning inventory here of 240 equivalent units. Conversion costs, they were what? 62.5% complete, 62.5% complete. So we did, how much work did we do in this period? Well, if we already did 62.5%, I have to do the other 37.5%. And when I take my 240 and multiply that by, 37.5%, I will have 90 equivalent units. Then I compute the remainder of my transferred out ones will come in from the units that we started working on this period, the additional transferred in units, the ones that were started and completed. So we always take from beginning inventory first. Remember, we sold 440. And let's see here. We had 440 minus the 240 from beginning inventory. So the remaining 200 came out of stuff that was transferred in and that we also completed this period. So calculate my equivalent units for those. Of course, the ones we started and completed, obviously we did all the work this period because we started it and completed it. So those are going to be 100% complete across the board for transferred in costs, direct materials, and conversion costs. For work in process ending inventory, remember, transferred in costs are going to be considered fully complete. But we need to also compute the amount of work done in this period for direct materials and conversion costs. And in this situation here, our ending inventory, we added no more direct materials yet to this, but we did do some conversion, and we were 80% of the way through the conversion process. So we take that 200 times 0.8 to get 160. So again, the equivalent units of work done in the period, step 2. Then we are going to do step 3. And remember, we have to account for the total costs across the board, whether it's transferred in costs, beginning inventory, the value of beginning inventory that was transferred in, plus costs added during the period that was transferred in, gives us a total cost to account for, not just for transferred in costs, but for direct materials and conversion costs as well. However, remember, under first in, first out, we take in only the costs added this period. We do not care about beginning inventory when we're computing our cost per equivalent unit. So I'm just going to X that out. That is irrelevant to our process here. So for the purposes of computing cost per equivalent unit, I'm just going to scratch that out. I'm going to take in my costs incurred this period. So I just care about this right here and nothing more. Would divide that by my equivalent units of production calculated in step 2, the total equivalent units of production, to get my cost per equivalent unit. And then again, I will take my cost per equivalent unit, multiply that by the amount of costs completed and transferred out as far as the units in ending inventory. So step 5, the same. A lot of this stuff is the same between, whether it's first in, first out or weighted average, but it's just the difference that we have this additional column here. And we're going to treat it as direct materials and that they've already received all their costs, so there's nothing more to add for direct costs or for direct material or for that transferred in costs. Now, when we do transferred in costs, we have to include the transferred in costs for previous departments in your calculations. In other words, if I'm asking you, and let's go back to A, B, and C again, my illustration from before. If I have a company that has 3 departments and it moves in order from department A to department B to department C, when we calculate the cost being transferred over, we have to include all the previous costs. So we want to make sure we include those in our calculations. Now, when we're calculating the cost to be transferred using first in, first out, don't overlook costs assigned in the previous period to units that were in process at the end of the at the beginning of the current period, but are now including units transferred. So we don't want to overlook that row of costs there to add the cost we did to beginning inventory this period, because those costs are going to become relevant under first in, first out. Then, once we compute our inventory here, transferred out, we're going to transfer of units completed and transferred out, that $122,360 right here. And let's go back here. That total cost of units completed and transferred out, that's going to be the total cost of all those units we transferred out through the period, 440 units. So if I'm now transferring that to finished goods, what is my average cost? Well, my average cost is going to be simply the total cost of units completed and transferred out divided by the number of units transferred out, and that's going to be my average price. So that's where we get the averaging part. So, and that averaging price I'm going to use for pricing, products mix decisions, and so forth. Now, another thing we should pay attention to is that unit costs may fluctuate between periods. So units may contain batches accumulated at different costs using first in, first out. Remember, the weighted average smooths all that out a little bit, so it's not as bumpy of a ride. But if unit costs for materials or something like that fluctuate, then the per unit cost is going to fluctuate as well on those units. So unit costs may fluctuate and go up and down between periods. And that's going to be because we have different batches of units as they come through, and they're going to be accumulated at different costs. Units may be measured in different denominations in different departments. For example, in one department, we may measure things in feet, in yards. Another department may use kilos or liters. In this case, measurements must be converted to the correct measure. So sometimes you're going to see that where one department will use one type of measurement, let's say in standard measurement, feet, yards, and then we'll switch over to the metric system for kilos or liters. So we want to make sure we convert those to the correct measure so that we have an accurate portrait of the costs. So that's the end of transferred in costs. I want to thank you for joining me. My name is Leroy Meadows. Have a good day.